Venkatesh is here with more on the monetary policy. Latha, what did you make of the policy?
Well, I think it was a giving policy, a Santa Claus policy, because not only the kind of partially expected rate cut was given, he did not quite shut the door on another cut. But he didn't promise one either, to be fair. What he said was that he's bringing inflation down so much in the first 2 quarters of next year. You know, the original forecast for April, May, June of FY27 was actually 4.9. It was brought down to 4.5 last time and now 3.9. And then for the next quarter, Q2, it's as low as 4%, with the governor repeatedly saying that if you subtract gold from this inflation index, then you get an inflation number which is half a percentage point lower than 4%. So you're talking of 3.5. That kind of repeatedly saying benign inflation can trigger a hope that if the need arises, he is not averse to cutting, though he didn't say. He said it would be speculative to expect a cut. The other positive Santa Claus policy, part of the policy, was the liquidity. Ample liquidity given only for the month of December. He's going to buy bonds, what you call OMO bond purchases, of 1 lakh crore, December 11th and 18th. And on 16th December, they're going to do a 3-year FX buy-sell swap. Basically, that's jargon for putting another $50 billion is what? Half a trillion. So that's 1.5 lakh crore of rupees coming into the system, which also gives the rupee bears a bit of a scare. See, if they put that much liquidity, they are ready to supply bonds in the market, supply dollars in the market. So in a way, all markets today reacted positively, and that's the positive. If you want to get the key takeaway, all 3 markets, stock markets, bond markets and rupee, reacted positively to what the governor said. So we should expect, NBFC companies, real estate companies, anybody who benefits from lower interest rates, consumer durables, all of them reacted positively. What may be the downsides? One is that banks are not happy. They are not going to be able to pass on this rate cut because depositors will not deposit if you keep on cutting. The repo can go anywhere, but depositors have their minimum threshold. So they can't cut down their cost of capital, and therefore passing on will be slow and tardy. So not very, very bank positive. The banks are obviously an unhappy lot because of this. The other negative could be you're putting in so much liquidity. As and when inflation picks up, you should be alert to pull back this liquidity. I mean, that's just a warning for the future. Not that inflation is looking like rising, but I'm just saying that just puts the Reserve Bank on notice.
So a few negatives, but a Santa Claus policy, as Latha is calling it. Thank you so much for those details. Now, the bond market